Yo, what's up, everyone? My name is Dom, and we're talking about unusual options activity. Alright, disclaimer, this video is for educational purposes only. The statements made in this programming are solely the opinion of the show and are not a specific inducement to make an investment. One must perform their own due diligence and realize that all investments carry a risk. There's no guaranteed profit. Alright, everyone, first one I want to bring up is Oatley. Now, this is a recently public company. They do oat milk. So, kind of a little strange, I guess, a little bit of a disruptor. One thing I'm a little skeptical about is the shares that could be released here, because this was an IPO, so you got to be careful with these IPOs because sometimes they have lockup expirations. So it's usually good to wait if you're going to buy the stock, in my opinion, it's good to wait until after those additional shares have been locked up and either sold on the open market by the insiders, depending on what they do with them. Sometimes they hold them. That's always a good sign that the stock could be, a little bit undervalued. But regardless, we got into the options here, so I did not go out and buy the stock. So it's significantly less risk, in my opinion. And if you look here at these November 19th, 17.5 strike calls, there was some nice volume, super low open interest, saw some nice orders there. So I decided to get into these November 19th, 17.5 strike calls. There was also some volume in these October 15 strike calls. Now, those ones are pretty much the same price as these November 17.5 calls. So I just decided to go with the out of the money call here in November. There was a little bit more volume there, so I figured why not take a little bit of a flyer. So we are these calls. Now let's take a look at the chart here. Like I said, this is a recent IPO here. I think the IPO priced below where the stock is actually at now. And if you look here, looks like around a couple months back, a month back or so, it looks like we came down to this exactly this $15 level here in the stock, and it looks like we had a nice bounce there up to about this 50-day moving average, but then we kept riding it down. What I find interesting here is that we closed pretty much exactly at this lower range of this candle here, right at that 1475 level, call it. Now, that's pretty promising here for a bounce. It looks like we dipped below that support level intraday, but then we came to close. What I always say is it matters on where you close. You could dip below support, but it always, in my opinion, matters where you close the day at. And we closed pretty much right at this support level. I like that they're buying calls. I like that they're buying out of the money calls. I like that they're buying two separate sets of calls here. Multiple people coming in, placing some orders in a stock that I don't really see hitting for unusual options activity often. So that in itself makes it unusual, along with the volume, along with the short term, along with the out of the money. I like the technicals here. So I think this trade is kind of lining up here. And I think that we could make some money with that one. So next one I want to bring up is Walmart here. Now, Walmart doesn't really hit too often, but it really doesn't hit often for the weekly options here. These expire next week, the 137 strike call. As you can see here, there's about 6,800 contracts traded here. Open interest of about only 18. So I like that ratio there. Pretty high ratio, volume to open interest. I do like a lot of stocks here. This is another example here where we're kind of at some good support in the chart here. Now, in my opinion, I always take a look at the chart and kind of see what's going on. Walmart, I think, is actually negative year to date. So if we come here and look about, January, it's actually negative. It's actually down about 5 points for the year. Now, so in this environment, I'm looking for laggards here. Walmart is clearly a laggard. I'm not in these calls yet, but it does look like here's something worth to point out is the stock has trouble getting through this 153.5, 153 and some change, call it. So that is definitely a good exit if you're going to be swing trading this one, just trading it. Obviously, if you're a long-term investor in this stock, that's a completely different story. But I do like the call action here. They're at the money calls, like 5 cents in the money. Usually I don't bite for the in the money calls, but this one is pretty much not in the money. It's in the money by only 5 cents. So there's a lot of extrinsic premium made up in that at the money call. And this is another example here. As you can look, we have support in the chart around this 135 level, back at September of last year. We came down and it looks like here we broke through that level. but we came right back up. You know, we had a few bounces off that 136 level, and it looks like here intraday we came and tested that level and immediately bounced off a bit on Friday. So I do like this chart here. Walmart has been a significant laggard here, so I do think there's some room to catch up here relative to some of these other stocks here. A lot of stocks, like I just said, are at pretty good support here. So in my opinion, it's super important to check out the chart and kind of marry the technicals with the activity that you're seeing. So thanks for everyone who has been subscribing. I really appreciate it. Make sure to leave a comment down below if you got any questions. Make sure to leave a like so I know to keep making more videos like this, and we'll see you in the next one.